Our market monitor tonight says this year in an index fund just won't be sufficient. He's John Traynor, Chief Investment Officer at People's United Bank's $5.5 billion wealth management division. Welcome. Good to have you with us, John. Why do you think this year particularly is a year when indexes will underperform, or are you better off with a stock picker?
Well, first of all, we would agree with your prior guest, Mohammed El-Arian. We believe we're going to see volatility increase this year, which will be good for active managers. But that we would take that even further and say the divergence that you're going to see, the divergence between the U.S. and Europe, the divergence between the Fed and the ECB and the Bank of Japan, and even the divergence between the oil winners and losers here in our own economy and around the world, that divergence between the good and the bad will create opportunities for active money managers. So we think the opportunity set will increase this year. So active management should do very well this year.
But how important is it for the individual investor to really know what is in that portfolio and know how it's weighted?
That's critical, and I'll give you an example. When you take a look at the emerging markets, you can buy an emerging market ETF, which can be very good. We're not against ETFs, but if you take a look at that, we believe there will be a big divergence this year between the commodity-oriented emerging market countries and the commodity-consuming emerging market countries. So we would suggest that you would take a look at the mutual fund that you own and err toward emerging Asia and away from Latin America, away from some of the commodity-oriented countries. So understand how your portfolio is weighted is very critical.
All right, John, let's get to a couple of your stock picks, and they are U.S. stocks, beginning with one of the big mega caps in tech, Oracle. Why do you like it?
We like Oracle. If you think about the headlines last year, the data breaches that we saw for large companies, for the government, and even Twitter feeds and some of the social networks, that was all about data security. Oracle is the leading company in database management. They were a little slow to get to the cloud. We think they're catching up. They're making the right moves. But database security is going to be critical going forward, and Oracle is the leader in that industry.
You also like Express Scripts because of their efficiencies.
We like their efficiencies, and one of the things we're looking at, as your viewers know, there's a very important Supreme Court decision that will come out later on this year that'll determine whether or not the state exchanges can continue functioning. We're looking for companies that will do well, whether the Supreme Court rules in either direction. Express Scripts brings cost control to the industry. We like it no matter however the Supreme Court rules.
And your third choice is a stock that was really beaten down over the past couple of years. It's come back a good bit. Why do you like it at this price, and how high do you think it can go? And that is Whole Foods.
Whole Foods is a company that we liked for quite a while. We liked the story, we liked the management, but it was just too expensive for us. We started looking at this back in early 2013. The stock traded off. It really came down last summer. We took another look at it, and we actually added it to our portfolios in September at about 39. The key issue here is they lost track of their value proposition. And what the company did was they focused on good food at good prices. They had great earnings. They really surprised us in their November earnings report. And we think that business model is back on track, and we're positive on Whole Foods.
Very quickly, your comments on the economy. How does it feel to you, John? Because there's some talk of deflation out there, which could be worrisome for the stock market as well.
We don't think you're going to see deflation, actually inflation declining, but low inflation in the U.S. And again, one of your prior guests talked about wage inflation. We think that's the key. That's what we're focusing on. We don't think that you're going to see the Fed really make a move on interest rates until they see wage inflation, and that's good for the economy and that's good for the stock market.
John, thank you very much. Have a great weekend.
Thank you.
John Traynor with People's United Wealth Management.